Be Wealthy and Smart, episode 1010.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why the stock market is looking strong. Yesterday, the Dow was up 599 points, or 1.8%, and it felt great to have the market rebounding again. We also had the NASDAQ up 367, or 2.92%, and the S&P 500 was up 2.14%. So a really strong day yesterday, and things were looking dramatically different than just a few days ago. But hopefully you bought on the dips and you felt a little more confident doing so. The market sentiment right now is extremely bearish, meaning that people have extreme fear. That is often an indicator at or near a bottom. And I do believe we've been in a bottoming process, as I've been telling you. So I feel like the bottom could be behind us. We may go down, test the lows again. But I really feel like we are getting closer to April and the second quarter, which has been that time frame that I've been telling you the stock market is going to take off on the upside. And I still believe that to be true. In fact, I think this week could be so strong that with short covering and margin calls and all the things that are going on in the background very quietly, we could probably see the market go up 5% or more just this week. Now today, the Federal Reserve is meeting and we're expecting them to raise interest rates by 0.25%, or 25 basis points. They'll go on with all their rhetoric and all their explanations why, and they may be expecting a recession or may not be expecting a recession, or they may be talking about shortages or not talking about shortages. It doesn't really matter. What matters is that the interest rates moved too far, too fast when they were doing all the jawboning about having 7 interest rate hikes this year. And that caused a terrible market correction, and so did the war. And now we are coming out of that other side where they're going to raise interest rates by 0.25%. I think the market will cheer and love that and take that as a positive and see that as a step in the right direction to calm down some of the inflation. And the market will cheer that the Fed is being proactive instead of not doing anything and just talking about it being transitory. So this is going to be positive. But I also think interest rates will recede a little bit on their own because they're going to see that things have slowed down a little bit. Higher oil prices did cause some issues and work to temper the economy a little bit. So overall, the Fed is going to have to figure out in the next few months that they're not going to be able to raise interest rates as much as they thought at the beginning of the year. And that is going to be very bullish for the stock market, particularly technology stocks. Now we're also seeing oil prices start to drop. And here, just a few days ago, all the media was talking about oil possibly going to $150 a barrel, and that's just not the case. We're under $100 a barrel, and that's a positive sign for the economy as well. We are coming into April pretty soon, which is where I believe the economy will really open up after the pandemic. A lot of that's going to be behind us, and most of the airlines, hotels, restaurants, etc., are going to be completely reopening and back to normal. So that is going to give the stock market a positive boost as well, and that's a very good thing. Now, something interesting happened yesterday, and that was that Russia disclosed they are going to be trading oil with China. This is huge news because of what's been known as the petrodollar. When Henry Kissinger went to Saudi Arabia and convinced them to trade oil in dollars, and we, the U.S., would defend Saudi Arabia, that was a huge deal, and that's been in effect for many, many years, in fact, decades. Now, with Saudi Arabia turning to China and saying we're going to sell our oil in yuan. The effect of that is to undo that deal and stop the petrodollar, which will dramatically reduce the world's demand for dollars. This is another blow against the US dollar, against the Federal Reserve. Between Brazil, Russia, India, China, and South Africa, the BRICS nations forming the CIPS, the cross-border interbank payment system, to bypass the SWIFT banking system. Well, now you have a situation where countries are lining up with Russia and leaving the dollar. Add to that the fact that the Chinese yuan and the Russian ruble have both talked about backing their currencies with gold, and now you have two more desirable currencies, possibly, than the US dollar, which is still fiat-based. This is where I think we can see that XRP could be the one to save the day, because it could come in as the world's reserve currency on a digital basis. It could be the one that could be the bridge currency between any other currency. So we'll have to keep an eye on that and see what happens. But I wouldn't be surprised if it doesn't become some form of national security that we need to do something about the dollar, and that might be to create a central bank digital currency using XRP to create those central bank digital currencies and be the bridge between them. So I hope during this whole bout of volatility that I've given you some confidence and some things to think about to help you through this, whether that was holding through it or being able to buy the dips or being able to identify some points to get into precious metals and add them to your portfolio, which I still think is going to be more important than ever, especially now as we get into this window of time where we may be dealing with currencies and issues with currencies. Having some silver in your possession is an important strategy right now. Don't trust anyone else to hold it. Don't give it to the bank in a safety deposit box or anything else. Hold it in your own possession and make sure you have some silver in your portfolio. It's going to be more and more difficult to get as the mint is having a difficult time creating more, as silver is still the lowest priced asset on the planet, most undervalued, and is still cheaper than it was 40 years ago. We've got two stocks coming up, splitting 20 for 1. That's Google and Amazon that I've talked about. We have precious metals that you want to have in your portfolio, mining stocks included there. There's a lot of important things to think about having in your portfolio, and you've just been given a great opportunity to do it. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And if you want some more market insights, sign up for my weekly newsletter at lindapjones.com, where I give you a little bit more insight as to what's going on in the stock market, precious metals, and cryptocurrency. And you can find all of my podcasts on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.